Okay, so that needs to go there. That can go there.
An error occurred. Great. Oh, okay, now it's working. Oh my goodness.
What's up?
All right.
We've got there.
Okay, we're good. I'm going to tweet out the link now. Why don't you... I guess we should introduce ourselves and we'll go from there.
Yeah, man. Let's do this. For people who don't know, I am the whiskey man of this chat. All the sensible things you will be hearing off Mr. Bear, and the rest will be myself, just enjoying what the bear has to say for now, and then I might comment a thing or two, and we'll see how that goes. But more importantly, let's pour the whiskey.
What are you drinking tonight?
I'm still battling away with a bottle of 10-year-old Talisker.
Oh, nice.
I really like it. I got some friends round on Saturday night, and I need to find a cheaper bottle for the guests. This is solely for this. A good whiskey needs to be good for a good podcast. It's the only way to get it done.
I like it. All right, so I'm Thomas the Bear, and I've probably spent the last 2 hours trying to figure out how we can stream in higher quality because I was using Jitsi, and that was stuck at 380 or 360p, and I couldn't get it to stream any higher than that. And then I tried using Google Meet, and that wouldn't work. And now we're back to StreamYard because that'll at least let us stream in 720p. So if anyone's listening and has any suggestions on what we can use to stream in higher quality, that's free, let us know. Otherwise, I'm going to have to shell out for
We're tight asses.
Yeah.
This is the problem.
Yeah, totally.
We should have put our Bitcoin address at the bottom. Would have been better.
Or our referral links to Binance. Please, sir, donate some BNB. All right, so we're going to try and stick to an hour this time. Last time we were an hour and 40 minutes. We've got a nice, tidy schedule this time that I don't know if... Yeah, we've got a couple things to talk about. Not too crazy. We're going to keep it light on the virus talk today. So why don't we just jump right in and get going? Oh, wow.
Let's do this. Oh, firstly, remember that anything we say today, I mean, to be honest, just dismiss everything. It's literally just a podcast of two people just discussing how they're positioned and just the general shenanigans that have gone on over the past week. So that's the most informal disclaimer ever, and I think that's probably the way it should be.
Yeah, this is definitely not investment advice, and if you think it is, well, you better go look yourself in the mirror and ask yourself why you're listening to us.
Then slap yourself and then punch the mirror.
Right. So, I mean, basically, yeah, exactly. So obviously this podcast is not meant for investment advice, and consult your investment professional before taking anything said in this podcast seriously before putting real money down on the line. So if we haven't disclaimered ourselves away yet, I don't think we ever will.
Right. I'm writing that on the to-do list of creating a disclaimer for the start.
Yeah, I guess we should probably hire a lawyer that can probably pay for our live streaming in high quality too. All right.
That's a good point.
Let's get the show on the road, shall we? So 2 weeks ago when we started off I guess this is our third iteration, and it seems like we're just getting started here. Let's see. We started talking about coronavirus in our first broadcast, and we probably spent 30 minutes discussing it. So let's start off with that again. Cases have exploded to 60,000. I don't even know if you can call it exploded. I think that this is still light in the total confirmed cases. Yesterday, China changed the way that they're evaluating the number of infected. So that number jumped just because they were able to classify more patients based on lung CTs and whether they had viral pneumonia and a couple of other criteria that allowed them to diagnose without confirmed RT-PCR testing. And that was the bottleneck for China, which we talked about last week, was that they were only getting about 2,000 to 3,000 confirmed cases a day, which was constrained by, again, those testing kits. So that's changed now. I would assume that the number prior to this revision is probably 10 times that. So yesterday's number was 45,000. I wouldn't be surprised if there's 500,000 infected at this point, just in China alone. We're seeing cases in the US start to pop up. There was some news article that, some of the US citizens that were rescued from Wuhan escaped quarantine, or they lost track of them and they were running around San Diego and recently diagnosed with the coronavirus. So they were silently...
Wait, what?
Yeah, you didn't hear about this? It's really nutty.
No. What? So people refused to go into quarantine
It's
and
not
they just
that
went running around the streets?
No, it's the U.S. It's our policies were really dumb. We basically kept them in quarantine for a few days, and it's like, oh, you look good, no fever, no other symptoms, good to go. And now it's like 2 weeks later, and they have the virus, and they weren't quarantined for long enough.
Wow!
These guys are just walking around the streets spreading this thing.
Rock on, America!
Yeah. Did you?
I mean, whereas here we've done the complete opposite, where somebody who has coronavirus basically was insisting that they may refuse to put themselves in isolation. So the government put some emergency laws through in order for basically the government to do any powers necessary to put people in isolation, even if they have to force them. So that's the lengths that we're going over here, at least. And then quarantine from people who have come back from Wuhan, we put them in quarantine for 2 weeks straight. And anybody basically, and to be honest, we're probably going too far. I mean, it's a good thing, I suppose, but basically, for example, somebody came in, I think a couple of days ago, said that they think they have coronavirus to come from Wuhan, and basically anybody that even spoke to them at the hospital, they've basically put them on 2 weeks leave in isolation. So that's the way these hospitals are dealing with it here. Even if you have any contact with anybody who has coronavirus who comes into the hospitals, basically whoever looks after them then goes on a 2 week leave to make sure they don't spread it to anybody else, just in case they get it. Obviously, I think that will change if, say, it ends up spreading a lot here, because then you'll have no nurses. So, yeah, we'll see.
Yeah, I think that's the right way of doing it, though. These people really need to be fully quarantined. But, I mean, at this point, we said this last week, the cat's out of the bag here. This thing's already escaped. It's in the wild. I saw some preliminary estimations on the R-naught outside of China. People are estimating it above 3, which is really, really high. An R-naught of 2.8 would be 90 million people infected worldwide, whereas an R-naught of 3 basically means 3 billion. Which means, one person can infect 3 people around them, and you just run the exponential math, and it's quite horrifying. But
there was one gent who then went to France on a skiing holiday on the way back for a few days, then came back to the UK, and they think they've basically branded him here, unfortunately for him. They've branded him the super spreader because they think that he's given it to 12 other people. Wow. So, yeah. So that ratio is a little bit off. But, yeah, imagine if it was 12 per person. But, yeah, I mean, as well, I think, I believe the WHO went to China yesterday for a little bit more. So I presume to find out more of what's going on, and whether that's ended up putting their figures up, whether the WHO have said you need to basically let these things happen depending on how they're diagnosed. So yeah, obviously, a day like this having, 14,000 confirmed cases, I mean, you would have thought the S&P maybe would have had a bit of a dip, but again, shit's given 0. So I mean, we're up today, which is very interesting. I mean, I think we're up. What are we up today? I mean, we're flat At the moment, it's up 0.07%, but still very interesting. So, I mean, I suppose now it's a case of possibly waiting for cases to come out over the next week to see how these will be compared to the new figures. Since everybody was starting to say, oh, over the last week, confirmed number of cases have slowly gone down. I personally think that's because China have a lot on the line from a perspective of, say you're going towards the end of the week, all confirmed cases going down. They need to get the workers back because the central bank have come out and they've said, well, at the end of the day, the economy is really important, basically more important. So personally, I think it was more of a make everybody a little bit calmer within China to go back to work and basically try and kickstart the economy. But it's obviously going to be a lot more complicated than that. So yeah, that's how I see it over the last week. But again, the markets clearly don't care whether still we don't really know how much this is going to affect the supply chain for the long term, or whether we're wrong and it's going to be fine. But we'll find out.
Yeah, it's very much a we'll find out. I mean, this is crazy. If you look at Twitter, there's like the entire FinTwit universe is just, they're up in arms. How can these stocks continue to rally in the face of a threat like the coronavirus? And you look at what's really insane is you look at airline stocks, and I thought those would be a great short, but we're going to shut down our major routes to China, which is basically where they earn the most of their money on those long haul flights. And American Airlines is rallying. And then United came out, or maybe it was either United or Delta, and they said they were going to suspend flights until end of April. And they're rallying. It's like, what the hell's going on? It's almost like, things are getting bad, so the government's going to have to add stimulus, which is good for the market. So the market rallies on the world ending. It's like, it's really bizarre. And then even more so bizarre are things like the cruise ships. You look at Norwegian cruise lines. I mean, you'd expect that stock to be catering, especially with what's going on. Like in Japan, did you hear I mean, I don't know if this was happening last week, but there's a ship full of people that are quarantined and getting that have the virus. They're not allowed to step foot in Japan, and they're just off the coast. I don't know if they're bringing them food or not, but last I heard they hadn't received food. Japan's obviously terrified about this thing reaching their shores because of the Olympics coming up. So God forbid they have to postpone the Olympics. That would be a major hit to their economy. But I mean, this is crazy. These things are rallying.
I think that one thing is, I think one thing is a massive FOMO reason for it. So I mean, if we look at the Q4 of 2018 on the SPY, we had obviously a very big correction, and everybody was basically calling for a possible slowdown or even a recession, and it didn't happen. And then we had a 30% rally of the S&P. Now, whether that's still in the back of everyone's minds and everyone's pissed off that they didn't make any money in 2019, because a lot of people did miss the boat and then were really hesitant to even get back in. So I think there's been a case now where it's like, okay, there's a virus, but more than likely by the time the spring comes, it'll be gone. So yeah, by any dip, basically. And I mean, to call it a dip, on some stocks like this stock here, I mean, that's down a little bit, but still nothing in comparison of, let's say, 2018. When, to be honest, I mean, if we look at the macro data comparing this year and last year, it's not too different, to be honest. If not, it's probably a little bit worse now looking at the macro data. But everybody seems to be buying this dip because they think that the virus is going to be over, which it could. So, yeah, I mean, me personally, I'm still hedged, same as last week. And to be honest, I've just been concentrating on my ISA, basically my pension portfolio, and I've just been going for some REITs, just some nice real estate investment trusts, and that's it. Just get a nice little yield out of that, and that's it. Because, as you say, like, it's a bit crazy at the moment. So I'll wait until we get more info again.
Yeah, I mean, from what I'm seeing from most of these, it's just like technical buying is what it looks like. I mean, you just draw some fibs on this chart. we came right into an area where you'd want to be buying just from a purely positioning standpoint. Things came off and people are buying the dip. So just like you said, it's playing right into that narrative. But boy, does it smell fishy. And I mean, things are just I just don't see how things can continue along the way that they're going when you're going to get news events like coronavirus cases jump, some ridiculous number over the day before that, how there won't be volatility coming into the market. I mean, look how volatility kind of got put back into the box down around the low teens. I mean, end of end of January, we were below 12, 11.7. Of course, we got that coronavirus headline and a couple of other things got screwed up, and the VIX jumped to 20. So there are definitely plays if you want to, I mean, I personally want to start taking advantage of a long volatility, kind of like I don't want to call it a portfolio, but definitely a position being long vol, and whether that means buying calls on the VIX, which I personally used to do, and it just got way too complicated and the signals way too convoluted. So instead, I just buy options. Right, you're going to take advantage of the expanding volatility by buying options, whether that's calls or puts. I personally like buying puts just because you get that expansion of the volatility along with the price rocketing downward, and things look pretty nice in your portfolio when that happens. But it's really a question of timing, and if you don't get the right expiration and the right price, you basically can lose all of it if you don't put on the right position or hedge it properly. So that's kind of one direction to play it. And then the other thing that I wanted to show was this. We talked yield curves and how they inverted last week. Let me see if I'm still put that in there. Yeah, so this is Koyfin. We talked about this last week. This is the poor man's Bloomberg. Great tool here. And you can see, probably not, because this freaking stream is only at 720. So let's just, I'm gonna narrate which line corresponds to what. So the red line here is the US 10-year to the 3-month. And this inverted twice already over the course of the year. You can see we're back above negative, but nonetheless inverted in the beginning of 2019. You've got the 5-year and the 2-year. This isn't, this has also inverted twice, but back just barely positive. And then you have the 5-year and the 3-month, very much still inverted. That to me is an ominous signal. We've inverted already over the last, I believe it was last year. Let me see. Yeah, so we inverted pretty hard in September, and let's go out a little more. Yeah, so this all started back in 2019. We got those initial inversions, but we remained inverted for quite some time. So I would consider that definitely a confirmed inversion of the yield curve. We're inverting again now. So what should everybody be thinking when you get an inversion of the yield curve? I'll just give you the answer quickly. That would be a rate cut. So let's see if the market is pricing in a rate cut. I've got the Euro dollar futures contracts up here. GEH, I believe, should be March. Yeah, so March 2000. So March of next month over March of the following year. We're pricing in about a 1/4 point cut right now. That's up from closer to a 1/2 point cut in February. So I would keep an eye out the next Fed meeting for them to start issuing or kind of hinting at language that another cut's coming down the line. I mean, I think we're going to zero rates, and after that happens, the Fed's out of ammunition, and then whoopsie, what do we do now? It's the real danger here. But I think a lot of, especially the really smart guys out there, they believe that's inevitable and has been inevitable since the Powell pivot in January 2019.
I think that's like a really good point as well, because you could argue as well that the reason why the market isn't correcting in any way possible is because either they are pricing in a rate cut, or just like basically the past, well, since this whole cycle now, anytime when it goes bad, it seems like the Fed will pull any fiscal or monetary strings possible to keep this basically long economic expansion going. So I think basically it's a fact that, you know, people are basically on a, let's say, on a sinking ship, but the Fed's already there with all the lifeboats ready for them just in case. And it just looked like it's getting to that point where as if institutions now are just like, oh, I'll be fine. That'll be absolutely fine. The Fed will save us, which is such a bad thing. I mean, we don't even know. I mean, even SARS corrected a lot worse than this. And like, even SARS, obviously, from a virus perspective, isn't as bad as what it is now. But also the Chinese economy, I think it was something like 6% back in 2003 of the world's GDP, whereas now it's looking at around 17%. And never mind the amount of debt that China have. And even more, I think, importantly, is the property market within China is so fragile, I think, at this point, and so many developers as well are so levered within this that they can't really afford for this virus really to even be happening. So I really don't. I mean, yeah, it's a really, I suppose, I don't know, it's just such a cautious situation to be in. I mean, I'm more than happy to just be chilled now and just, yeah, just watch from the sidelines.
Yeah, I get that. But there's, imagine all the people that have long portfolios, whether that's their investment accounts, their retirement accounts. I mean, they're happy, right? I mean, the stocks keep making new
Yeah,
highs every week despite all this going on, and I worry that the average investor is just kind of like, yeah, coronavirus, it's just like the flu, or this yield curve, schmield curve, doesn't matter. Like interest rates going to zero, whatever. That means everyone can borrow more money and buy long options at a lower
yeah.
rate. And it's
Well,
like,
that's a really good point though as well. Like saying like, you know, people with having their pensions etc. within there, and we've got to remember even just from a macro like demographic perspective, I suppose that is another great reason why the Fed just want to keep this going because of the amount of, I mean, the baby boomers are such a large demographic. If their pensions were fucked because of a downturn, and then I mean basically everything's fucked to them because they're just such a large part of the population now that yeah, that'd just be the worst event possible for them. So I mean, there's just so many reasons now for the Fed to just try and keep this going as long as possible. But at some day, it's you know that day will come. So we'll see.
yeah,
Could be
speaking of,
20 years from now. Who
that's
knows?
the thing, right? We could be like in the longest stock market melt up in the
Why
history
not?
of ever. And this
Why
thing
not?
just melts up.
Australia haven't had a recession for 25 years. Why not the US?
I just can't imagine
Can you imagine?
I couldn't. I really like. I would feel so horrible along with the rest of our generation. Like millennials would be like, "Fuck, we should have bought the stock market. What were we thinking?" And we're all like, 40 and 50 years old, and stocks are at like 100. The Dow's at 100,000, and the S&P's at like, something stupid. And we're just like, oh, good thing we bought crypto. And it's like, at the end of the day, the stock market outperformed crypto. Like, how crazy would that be? But speaking of baby boomers, you look at healthcare stocks and they just continue to perform. You look at things like, this is the XLV. That's, I mean, that just continues to pile higher. And with the aging population, it doesn't surprise me. And also with the potential for a couple of these drug companies to benefit monetarily from the coronavirus, companies like Gilead, I think we mentioned them last week, they keep coming down here. It's an interesting play. Like, I really wonder if we can get in on a stock like this down around the $65 level, looking for them to be the ones to develop a vaccine or whatever it is that they need to do. AbbVie is another one that continued to pile higher. What's the name of the company that has the
NCYT? Is that? Oh, that's still rallying at least.
What's that?
NCYT. They do the testing kits in the UK. They developed one of the first companies to develop.
That's right. Yeah, this thing's really punched higher. I mean, look at just from the day coronavirus really became big, this thing was like $15, and now it's almost $80. Crazy.
Well, that ship has sailed.
Yeah. So let's jump into a couple things that I've been toying around with this week. I'm trying to get back into trading options and revisiting my stock portfolio here and trying to mess around with that. So because crypto's kind of taken most of my attention and still does have most of my attention. So trying to get back into the mix here. I took a position I was looking at Starbucks yesterday. I mean, this thing looks really cute for a counter trend rally. The first week we did the show, I said I really like the idea of shorting Starbucks if we can come back into a level. But now that we're seeing the way the markets have reacted, it's kind of like, well, maybe I should just play it to the long side and see what happens. Sure, this thing can come into the 61.8 here. You can see, or maybe I'll stop saying you can see because you probably can't see, but 61.8 is $90.50. We're currently trading at $90. Yesterday on Twitter, I was interested in the $90 calls at 88.5. I did not get in on this because the market closed and we did not have a confirmed structural position here on the chart, but it looks juicy. Whether or not this is simply a gap fill up to 78.6 on the Fib retracement to 92.7 cents, or if this thing's going to continue driving higher is going to be the ultimate question. But I don't think we're too late here. I mean, all the signs show that volume is starting to come in. So it's kind of hard to say, is this thing going to stall out at that level, or is this thing going to continue piling higher? The extension here points to about 92 to 95, looks to be, the full extension is $97.50, and your 61.8 level is $92.50, which is just beyond the gap fill. This thing's looking like it's starting to gain steam, confirm this double bottom here. And I think Starbucks could potentially make new highs. I don't know what the fundamentals are behind this. I imagine that the China situation is going to end up negatively impacting this stock. But the question is that going to happen now, or is it going to be happening in Q2 and Q3 after they report earnings? So I think, a quick, call it a short-dated option. Why don't I bring up the terminal here? Let's bring up our interactive smokers.
Right, smokers. Yeah.
We're going to do a demo account here and see what this thing's pricing out at. I think yesterday. What's that?
So you're probably looking, it's not much. I mean, the revenue in general for Starbucks, so you're looking at around 70% just for the US alone. Other countries is 30%. So I'm not sure what that is in China, but I can't imagine the revenue is going to be too much simply because of the amount of per person that the Chinese people drink of coffee is a lot lower compared to, for example, Europe. I think they have like average, I don't know, it's like 7 a year or something crazy.
Wow. Wait, say that again? They only drink 7 coffees a year?
Because tea is more important in China, you see. So tea they drink a lot of. Coffee is very much a Western thing, and more of an urbanized, I suppose, city life thing is coffee. So yeah, for them it's tea all the time. I think compare that to an American, I think it's something like 560 on average per person. So probably sounds a little bit better.
Huh.
So yeah.
No, those guys in the city,
So
they're drinking the shit out of coffee. Are you kidding me? Tea's not hard enough. Exactly. They're doing cocaine and coffee.
Yeah, no. In China, it's all about the tea, my brother.
Yeah.
But the only reason why they're trying to penetrate China is because they're basically trying to turn the Chinese onto coffee. And then if they do, well, it's a good 1.6 billion people to have of drinking coffee.
That's true. That's a nice population. So I've got the Starbucks strikes here. I was looking for the March monthly. So that's the March 20th expiration. I hate this stream. I really want to figure this out before next time. Can't see. I've got the YouTube right next to my screen and you can't really make out the digits. So, since when is 720 not good enough? All right. So I was looking at the $90 calls. The bid is 243. I think when I was looking at it yesterday, it was like $1.25 or something. So wow, this thing almost doubled since yesterday, and it only went up $1. That's pretty wild. All right, so I missed the boat on that one. That's fun. The next, I mean, if this thing can come back down, I'm definitely interested in it. Probably sub $2 an option contract, but I think that that's a little rich for me. $2 before we don't really have any intrinsic value at that point. So yeah, I'll wait for this to dip. If it does, probably retest. Those of you that are familiar with my trading style from the past, that I like to use necklines of double bottoms to look for buying opportunities. I would consider this confirmed after it closes at this point. If we dip suddenly down and you've got this monster wick at the top here, then probably have to wait until tomorrow for another confirmation. But I could see this thing at least retesting. You can see the moving averages still need time to cross bullish again. So we might get an opportunity. We may not. If not, whatever. It is what it is. And then the other position that I had put on is this Visa trade. I bought a very short-dated call on this thing. What did I buy? I have this on Interactive Brokers here. I've been trying to mess around with this demo account. I bought the Visa 210 calls. I think I have this on my chart, actually. This would be smarter. Here you go. All right, so 210 calls, paid $1.58. February 28th expiration, very, very short dated. Expires in, 2 weeks? So if this thing doesn't get going in the next couple of days or the next week, I would assume that this is not going to break out to new highs. But I'm assuming that Visa and a lot of the other financials are going to continue pressing higher along with the rest of the market. I mean, it's just crazy, right? The Dow opened up down almost 200 points, and now we're sitting down 58. And it's just buy the fucking dip. That's just all this comes down to. Everyone on Reddit and that Wall Street Bets are like, buy Microsoft. It's free money. Just buy calls. And it's true. Buy the fucking dip. And it's mind blowing. So anyway, I've got these Visa calls on. Sorry, you want to chime in there?
No. I mean, I was going to talk about that. I mean, obviously, yeah, like you say, finance stocks, the finance sector seems to be really buoyant, to be honest. I mean, they've got shitloads of cash on them at the moment. A lot of the banks do. So, I mean, they've got a lot of, let's say, security for now. But I think one thing maybe to look out for in maybe the next quarter would be semiconductors. So, I mean, you've had a lot of companies now who are affected by everything going on with China, that they've basically revised their fiscal year to lower growth, basically, because of everything that's going on. But semiconductors, not one has still come out yet to basically say, okay, well, because of this going on within China, we're going to reduce our forecasts for the fiscal year. Now, nobody's come out yet. So I'm really interested to see. I mean, I'm in no positions in semiconductors. I mean, for me, I don't really understand it that much. But I mean, other than that, I think it's quite an interesting one to look at. I mean, I think you like to have a look at semiconductors now and again, don't you? But yeah, nobody's revised anything. And I mean, semiconductors are obviously heavily involved in China. So it'll be interesting to see how that one plays out for the year. So yeah.
Yeah, sorry, I'm messing around with my screen resolution right now. But I agree. I think that the semiconductors, along with everything else, is definitely vulnerable. But the problem is, how do you time this thing, and how do you how do you play it? So I've got this thing full screen now. Let's see if this looks any different. It's all right. I don't know if it makes much of a difference. What's that?
I think that helped about half a centimeter.
Yeah, I don't think this is doing anything. This sucks. All right, I'll put it back. Sorry, guys. Keep changes. All right, so you are talking about the stocks, and I think that's really interesting because on one hand, yes, manufacturing and all the supply out of China has to do with a lot of the companies that make up the socks. So what companies make up the socks? Well, let's bring up our poor man's Bloomberg. Where the hell is this thing? And oh no, it messed up the positioning too. Damn. All right. Poor man's Bloomberg. I'm just a mess today. I'm sorry. It's like the
poor man's streaming. This is what this is.
This really is. Like, this is the third time in a row. You'd think we have our shit together by now, and it's just like it's still not happening.
We're just chilling.
We're just having a good time. You know what? Laugh at my expense. So here we've got the stocks, the top ETF holdings. You've got NVIDIA, Intel, Texas Instruments, Qualcomm, Broadcom, and AMD. Well, AMD's been the darling performer for the better part of the last year. I mean, this thing's just, hell, most of them have gone up, but AMD, much better than NVIDIA. Is it? I don't know. They just all are everything's fucking going up. So where do you look to take positions on these things, right? You can't just like blindly be shorting them at any of these levels, because clearly, despite everything being pretty much closed, and even if these companies in China are not closed, productivity has decreased. I mean, I saw pictures of people eating lunch in China with like cardboard box dividers, and like people have plastic over their computer screen draped over their bodies.
Yeah, I've seen that.
Did you see those pictures? It's like wild.
That's another level.
I mean, it's just, I can't imagine how they're going to get shit done, but it's just crazy. Whatever. We've already.
Let's move it forward.
Good Lord. So you can't really short these things blindly. And it just seems like there's an automated program that's running behind the scenes of all of these markets. It's just like, okay, we've got a buy program. Everything's going to continue rallying indefinitely until we turn it off. And that just seems like what we've got here. So things like AMD, Intel. I mean, I personally like AMD better than Intel, but still no top in sight here for Intel. There are other strategies to play, right? If you kind of want to capture the further upside of these markets and limit your downside, or at least be protected if this thing does go down, there's these crazy option strategies you can use, where you basically buy yourself a free position to the upside by selling a put down below. And depending on how that works out, if the market crashes, you've got your put that you sold, so you can collect the credit on that. But if the market powers higher, you basically have a free position, and the only thing you lose is that credit. So you use the credit to pay for your long position, and you've effectively financed yourself into you've kind of navigated yourself into a kind of like a hedged position where you've got all of the upside and you're protected to the downside. It's quite an interesting strategy. Those of you that listen to Macro Voices, Tian Yang talked about it. I believe it was in December or November. It's called the ratio call spread. And he took that on the S&P back in November, December, where he sold a couple of puts down below here to finance his call position. And I think it ended up being like a 10 bagger or something crazy, maybe a little bit less than that. But I know a couple people that took the same trade as he did, and they did quite well. But I know one of them got assigned on one of the legs, so that kind of made him very nervous. But it ended up working out in the end. And as we go forward here, I'll be putting on positions like that so we can talk more in depth about stuff like that, because I know that we've got listeners who are interested in option strategies and crazy man trading like I like to do. So that's the thing. You could use the same strategy on pretty much any of these. Of course, there's the risk of being assigned, and there are potential caveats that put your account at risk, but those we'll save for later and we'll discuss more in depth. But I mean, looking at the stocks, that could be potentially something that you could ratio. But other people have talked about things like the energy sector and oil. Oil's been testing bottoms at like high 40s, low 50s. You don't trade oil, do you, Jamie?
No, I mean, I like to keep an eye on oil, but I've been quite amazed at how much it's actually gone down, to be honest, over the past month or two. But yeah, I think to look at oil now, I think it's a bit risky. I can't see it going any lower. And at the same time, I can't see it going higher anytime soon. So, yeah, if you were to catch it to obviously go short it, then yeah, I mean, that was a good trade overall. But I honestly wasn't expecting it to be that violent, especially if, like, yeah, as I said last week, comparing it to the S&P, like, you would have thought there would have been a bigger correction if this was happening with the crude oil. I mean, it's a crazy nice little, I mean, it's a beautiful little play, to be honest, if you could get involved in it. But yeah, I think maybe, I mean, you've had a bounce over the last few days, and it seems the Russians, I think we spoke about it last week, that they're now going to cut 600,000 barrels of oil in production. Now, everybody's agreed with it so far except for Russia. So simply because Russia, obviously, it's a lot more private, like they're usually private refineries that have to agree with this, and it's not governmental. So if, I mean, they're bound to go ahead with it. Let's be honest. I mean, Putin, I'm sure he'll get his whip out just in case. But if it doesn't, then it probably could still go lower here. But I doubt that'll happen.
Yeah, I mean, if you look at just zooming out on this chart, well, hell, let's put it on a weekly chart. This will look better. You can. I'm gonna stop. I'm gonna cut myself off. I can't see, but you know, we've come into Mountain Man, right? And anyone that plays that 61.8 level knows that generally the market likes to oscillate around that 61.8 fib level. So it's not surprising to me, at least, why we might catch a bid. I could see counter trend rallies coming back up into, say, you know, back up to $58, maybe get another $7 to $8 out of this move, and then reevaluate what this looks like. You know, 38.2 ideas. If this thing only gets to $55, you know what? You know, 38.2 essentially means if you resolve that thing back down, if you get rejected in that area, and this thing nosedives back into the low 50s, I mean, oil's just going to suffer here, and that we'll see if this thing can even muster up a bounce. Because if you look at the daily chart, this thing's barely put in that double bottom. It looks like it's confirming here today, but I mean, it's awfully crazy bet, you know, just to take, and it's probably the right one to take. You've got your setup here. You've got divergence coming in, which I put these wonky setups on the MACD. Nice little W in that volume, on balance volume here. I mean, it just looks like it's overdue, but just because it's overdue for a bounce doesn't mean it should bounce. So I don't know who's playing oil, but I don't particularly like that. I play the other companies like there's the XOP, and then that's the ETF. That looks quite different than the oil contract itself. Obviously, they're slightly different just in the way that the companies that make up that ETF. And then I've got a position in ExxonMobil that I'm very much underwater on. I took a 6-month call out right around end of December. So this position is pretty much worth next to nothing, but any kind of counter trend rallies and this thing will come back to life. So it's not all rosy trading for me, as probably you guys know if you've watched my Ethereum failures. Did you see all those tweets I keep putting out shorting Ethereum like an idiot?
It's right. We all have those days. I've had the same last week. So yeah, I mean, at the moment, it seems I was looking at some of the altcoins today actually, and just having a look at the overall market cap of all of the market except for Bitcoin, and it looks like even from a broad general range, I think it's, what is it, total 2 on TradingView, is it? If you just type in total 2, and then yeah, it seems we could be on the verge of having a nice weekly massive W on the long term. So
what am I
we'll see how that goes.
Here? Total 2?
Just literally type in total 2, with 2 being the number. Yeah.
All right.
So this is, if you put it on the weekly, you can then see it's basically all of the total market cap of all coins.
Oh wow, that looks like exactly like it. Well, not exactly, but very close to Ethereum.
So we'll see how that goes. But yeah, it's that segue over to crypto world, and we will finish with the stock world. I mean, I had a couple of positions I've started nibbling on, nothing too big. I was looking at RTN, which is we were talking about over the last couple of days, which is basically a company that own various restaurant brands in the UK, but they also bought last year Wagamama's. So they're coming up with a Mama Go concept, basically having smaller stores, better for delivery, and also basically like more premium lunches for, say, office workers. So nice, healthy Japanese food. So I think that's not a bad one to look at. So that's what I'm looking at maybe over the next few months. And then another one, because I've been looking, because obviously everything's just a little bit up in the air at the moment, I've been just looking at different REITs for my ISA. So one I like is the ticker, I believe, is RLE. So it's a residential and commercial REIT. So pretty good yield, to be honest, gives you a good 6.7% dividend yield. And I'm from the Midlands area, so they predominantly have most of their portfolio in residential and commercial within Birmingham, to be honest. And I mean, if you don't know anything about Birmingham, Thomas, well, you just got to buy. You just got to buy. So everybody from London is just coming up to Birmingham now, and a lot of investments going up here. So with a high-speed rail connecting London to Birmingham, Birmingham's the second biggest city, if you didn't know, and has more canals than Venice. Terms and conditions apply. The canals may not be as clean as Venice, but these things happen.
So what's your play here? You're just like long because of the dividend, or?
Yeah, so basically within my ISA, I have a very low risk portfolio. So it's predominantly dividends and usually funds like Vanguard funds, etc. So I wanted more. I mean, I've been looking at properties, etc., to invest in bricks and mortar. But then I was like, well, at the moment, with everything a little bit up in the air, do a little bit more research before I start taking the plunge. So I thought, well, I may as well just pop some REITs in instead. So for me, yeah, I've been popping into REITs. I mean, it's better than putting it into a bond, right? And then with ISAs here in the UK, you don't need to pay tax on, so anything that comes out of it, no tax required. So it's a nice one. And at the end of the day, I mean, out of all the sectors that are outperforming or at least safe up to a certain point, depending on where you are in the world, definitely since Brexit and the election, property has skyrocketed over the last couple of months here in the UK. So house prices year on year have gone up a lot compared to basically the last year, just in 1 month, because of the uncertainty that's been basically taken away. And everybody buys property here in the UK. It's just one of those things that's just in our blood, I think. We just like to own our own house. So everybody buys property. And yeah, again, Birmingham's a really nice place. Lots of investment is going into it. The youngest city in Europe. So from a long-term point of view, it's really good. As I said, second biggest city. Have people from London can't afford houses in London anymore, so they're coming up north and coming to Birmingham. So yeah, it's changed really quickly, and the house prices have as well. So yeah, it's just a nice long-term play. Nice for me personally, a safe one of what I've been looking at. And for a 6.7% dividend, I'll take it. I'll take that instead of the 0.25% bond. Thank you very much.
And this is kind of plays into what you figured out. You were talking to me privately about how everyone's kind of moved to buying these places to rent out because of the incentives, right?
Yeah. So, yeah. I mean, to be honest, you can get some pretty good yields in the UK. It's still pretty cheap. I mean, compared to America, it's really cheap. And because the UK is such a small island compared to America, so everything's pretty concentrated. So, I mean, London to Birmingham, the two biggest cities. I mean, once the high-speed rail's in, at the moment it takes an hour and 20 minutes, but it'll only take 45 minutes once the high-speed rail's in. So it's nothing. I mean, in America, that would definitely be nothing. And even on the underground, you can go from, say, the furthest stop in the underground into the centre, and it can take over 45 minutes. So, yeah, it's a good alternative. And plus, you know, it's good to diversify. So, yeah, for me, it's one that I've been looking at for a while, and then I'm looking at another one at the moment as well, which is CRC, another one again, but they have a little bit of exposure to retail. So predominantly, mainly the reason why I don't want to be too much into retail is because this late in the cycle, and also consumer spending isn't exactly that great in the UK at the moment. People seem to want to go out to restaurants and get drunk. That's the thing that consumers spend the most money on. Actually, that's the only thing that's up the most year on year. But yeah, other than that, yeah, it's pretty difficult for retail at the moment. But yeah, I mean, with all the uncertainty, why not just sit back, get a nice dividend yield in, and just stick to the sectors that perform best? In what you were looking at, healthcare, definitely a sector that's been overperforming, like outperforming for the past year, if not longer, in the US. And yeah, just look at some staples as well. So nice and simple.
It's interesting.
Keep it simple, stupid.
Yeah, I love that, Brog. Excuse me. I love that it's fascinating to see the UK housing situation and comparing it to what's going on here in the US, and it seems very similar to me. Things overpriced and people trying to take advantage of whatever they can at the current moment. But before I go and talk about home builders, this is you were talking about retail sales. Well, this is the retail. This is the wrong ETF. But if you look at like the individual stores, like what's the parent company of Victoria's Secret that just sold out or something? Do you remember that?
It's a really weird name. It is
L Brands.
That's it, L Brands, yeah. So L Brands has been terrible. I've been looking at this one. I was actually looking at this one to maybe short it further a few months back, but then I was like, nah, you never know. Could bounce back.
Yeah, so the ticker's LB, Limited Brands. Yeah. Okay. Yeah, this thing's just kind of put in this saucer-shaped bottom, but it looks like it's topping out. I mean, if anything looked kind of ripe for a short, you've got earnings coming up at the end of the month. I'm actually really interested in taking a short position on this. I was looking at this like last week and was waiting for a signal to break down. I don't have it just yet, but it's looking really close. I wonder what this thing looks like from an options perspective. Maybe we'll revisit that next week, because I can't imagine this thing's going to start dumping before the earnings. This gap up here, I think, is because of the announcement that they acquired Victoria's Secret. And what's the other one? There's a LVMH that's like Louis Vuitton and shit, right?
Yeah, so I'm actually short this at the moment, just as a little bit of a hedge against
that's like
the coronavirus.
China hedge.
Yeah, China hedge. So 30% of their revenue is in Asia. So a big chunk of their revenue, and to be honest, most of their forward-looking PEs because of Asia, because the Chinese are like the Russians; they'll buy anything that basically is expensive. So yeah, we'll see how that one goes. They actually had earnings that come out that actually came out quite well. They weren't too concerned, at least for the moment. So it actually rallied 3% yesterday. It's corrected itself since, I think. But for me, I don't mind. Have it nice and hedged against the rest of my longs. So for now, as I said, we'll see how that one goes. But to be honest, luxury brands have actually done really well. Luxury brands have over this whole cycle, to be honest, luxury brands have really killed it. It seems to be the more low end or even mid-range ones that have done really bad. One thing I was looking at for a while, I don't know if you have it over there, it's called BSing.
Yeah, I think
you know what it is? So I was actually looking at a long position of this a couple of months back, and I just didn't pull the trigger on it. And I'm really annoyed because I started seeing quite a lot of people wear it here, and people started liking the brand, and they've started doing this whole, I can't remember what it's called now, but basically getting celebrities to endorse the brand. So they had J Balvin, if you don't know who that is. It's like a famous reggaeton singer. Huge within Latin America. And yeah, it's rallied quite well, to be honest. I think I was looking down at 18. It's now up, 20%. So yeah, a bit annoyed about that, but I wasn't too sure. But I mean, over here in the UK, some brands have done terribly. I mean, if you type in SDRY on the LSE, oof, there's been such a bad 2019. So this brand was really good over the last, maybe over the cycle, to be honest. People used to buy the brands, but the last year, it's just been a train wreck.
Wow.
Yeah.
This thing's really down at the bottom end of the range here, huh? I mean, it hasn't been down this low since 2012.
Mm-hmm. So it's a difficult one. It's probably going to be one that Mike Ashley that will probably end up buying out. Mike Ashley is the person who owns Sports Direct. He always buys basically brands that are about to go out of business, and then he sells them for half the price.
So
I don't know if you went to the shop, Sports Direct.
No, did this ever reverse split, or did they raise money to bring this price all the way down, or was this just organic sell-off?
I honestly couldn't tell you. I'm pretty sure it would have been an organic sell-off.
That's nasty. This thing went from $2,100 and now it's $366.
I'd love to have a look at the credit spreads and see how much debt it has. I'm sure I could have a look in a second, actually. If there's actually a debt structure to it. But yeah, there's been quite a lot of brands like that in the UK. The retail has really taken a hit, to be honest. I mean, UK is probably one of the highest spenders online. Not many people now go to the shops and spend. Not as much, anyway, as other countries. So let's have a look at the debt structure of this thing.
I'm guessing I can't. What do you use to look up stuff from London?
If I'm honest, I am I use Reuters. I use the poor man's Bloomberg. So I actually use a terminal.
I didn't even think about
terminal.
that. Where is this?
Yeah, that is the poor man's terminal. But it's really good, to be honest. But they don't show the debt structure on here. If analysts have got anything to say on it, they're 3 are saying strong buy, 3 are saying buy, and 5 are saying hold. That means nothing. But yeah, so that's another one. But retail's just really taking a hit. Consumer spending is going down. Did you see the JOLTS report as well over the last few days in America? So, I mean, the JOLTS report came out, I think it was the worst one since Feb 2018 in terms of numbers, which I found that interesting, but not many people spoke about it too much. Whether that will continue, and that'll be interesting to see, because if there's not as many job opportunities, then. But it's, as we keep saying, it's really hard to gauge at the moment.
So, I mean, as far as.
Is there anything else you're looking at?
Say that again?
Are you looking at anything else stock-wise?
I think we've covered most of it. Like, I'm definitely slow to getting back into this, but I'll be updating Twitter with, positions that I'm either looking at or taking. And you guys should just do the opposite of whatever I do. Inverse me, and you'll probably end up doing better, especially given my track. Yeah. It's been.
I'll create a separate interactive brokers portfolio.
Yeah, there you go. That would be interesting to track the inverse trades. I was looking at the euro and cable. Did you see how your currency seems to be weakening in the face of the news today with your prime minister layoff? Yeah. So basically, I think the real reason for that, I mean, it's rallied a little bit over the last few weeks. But I think the thing is that I think one of the things that the Chancellor, basically, for people who don't know, the Chancellor of Exchequer, which is the equivalent of, what's that called in the US? The Vice President. It's basically the equivalent of the Vice President, the Chancellor of Exchequer in the UK. Oh, so he
basically sets the budget. Okay, he does more than the Vice President. So he basically sets the budget. So the thing is that there's a budget next month. So the reason why we think that, the reason is why he's been sacked is because basically Boris Johnson said to him, sack all of your advisors. And he was like, no, I'll resign. So the reason for that, we think, is because Boris Johnson really wants to do a Trump and print shitloads of money to basically do whatever he can do for public services, etc., and more importantly, to get re-elected for the next election. So it seems that he's now resigned because of that. So we can definitely expect the UK to have definitely a massive budget on public spending over the next at least a year. So it looks like that. Yeah, basically the UK will be expanding its balance sheets, which personally I think is a good thing up to a certain point. I always it's really difficult to, I suppose, gauge if it's a good or bad thing whether your country prints a lot of money. I think for the US, you can get away with it, and the same for the pound up to a certain point because they're known as haven currencies. But I think for currencies that aren't traded a lot, that's where they get hit, where they try and spend too much, and nobody really buys their currency. So I think we'll be all right out of it as long as we don't go into the US stage of getting into. I mean, how much is your debt now? 4.5 trillion, is it?
Sounds cheap.
Yeah, something ridiculous. So, I mean, at the end of the day, if the US are doing it, we may as well do it as well. And if that helps out, well, that's always good. So yeah, so I think it's a little bit of play of trying to make sure that the public services are run well, but of course, it's all about getting re-elected, isn't it? I mean, it's a long way away. It's not like Trump, for example, in November. Which I mean, how is that going over there with everything going on with the who's in the lead in the Democratic candidate? Is it Old Man Sanders?
Yeah, last I checked, looks like Sanders has taken the lead, and who's that Joe Biden guy is basically dropping off the cliff. You know, he was the clear favorite, and now he's just done so. So it looks like it's going to be a Sanders Trump election. Am I still connected here? Jamie, are you there? Uh-oh. I think we might have lost Jamie. I think I'm still connected. Is listening. Can you comment in the YouTube and let me know if I'm still on here? Yeah, Christian, I know. I've got issues with the resolution. All right, I'm still live. Jamie disappeared. Hopefully we get him back on here. Yeah, Christian, I know I've got problems with resolution. I need to get a new program for streaming, whether that's streaming using OBS or on the pay-for platform. If anyone, again, has any input, please let me know. How do I let Jamie know that he dropped out? You dropped out. Let's see if he reconnects. All right, so in the meantime, let's move on to crypto. I know Jamie, I don't know how much he's been trading crypto, but I certainly have been, as you could see from my tweets. You probably watched me fail. I think it was like 4 or 5 trades in a row that I missed to the downside, but that was probably just my fault. I wasn't waiting for my full confirmations that I usually take on the higher time frames. I was mostly trading these lower time frame signals that just are not as consistent and, most importantly, do not work in trending bull markets. And that's what I think this market is. I mean, depending on which time frame you look at, you might just call it range bound if you're looking at it from the daily. We haven't started trending into a daily bull market until, I mean, I'd argue that we get above these highs beyond 78.6. That to me would indicate a nice double bottom here above 300 and 320 bucks, call it. Or nope, that's wrong. Oh, my fibs are changing. Yeah, call it like $335. If Ethereum can get above that level, then I think we're off to the races. And you can kind of draw things like your fibs from the all-time highs and take a look at where we could potentially be off to. 38.2 of the higher ranges, 660. So that's almost 3 times from where we are now. I mean, where can we go from the short term? As far as I'm looking at right now from the hourly, this is the first time that we've run into a little bit of traffic. You can see that there's some distribution going on in this channel right here, which is very much different than what we saw in this phase where we were just kind of moving upward. This area down here, you can see the same kind of phases, but you never got that true follow through, and the internals didn't quite confirm the dump as much as I think things are starting to come in right now. We got that MACD divergence that confirmed with our nice market structure signal, but we didn't get the follow through beyond 38.2. So at this point, we're still bullish because we haven't broken below that 38.2 level. And in fact, the buy the dip crowd came into Ethereum. I don't think it should be a surprise that people are buying the dip. There's an article that I found actually, well, last week we talked about the Ethereum volume pouring into the space, and we looked at the skew charts. Well, there's a story here from CoinDesk talking about daily Ethereum volume, and it's at the highest it's been for the past I think for the past couple of years here. So it's saying that price rose to 7 months highs on Wednesday. Daily volume exceeded $4.5 billion for the first time since June. Okay, so June 2019 was the last time this thing rallied and got stopped short at that $300 level. $300 was kind of back here. And you can see the volume that was pouring in right around these times, May, June. But if we compare the volume studies, you can see we're not quite at those levels from Kraken, at least. I guess aggregate exchange volume is what they're talking about, and that's displayed here on Skew. If you go to your, let's just go to the Ether futures. Oh, and that's of course an article about futures. So you want to look at these aggregate daily volumes here. I guess I need an account to see more than this, but essentially since January, these things continue to make new highs, which is, interesting. These things continue to pile in higher. We talked about spreads a little bit last week. Spreads are still pointing higher. There's nothing to me indicating that these things are about to break down at all. And that should really have been my number one tell that I shouldn't be taking short positions when we are in this bullishly trending market with spreads at the premium that they're at now. Ethereum future spreads were $11 over spot at one point. Now they're at $9, and Bitcoin futures were almost $400 over spot. I think we actually touched 11,000 on the 3-month contract on OKX before pulling back. Let's see, the absolute high was 10.95. Where is it? 10,000, 11,050. So we did punch through that $11,000 number. But, before I talked about Bitcoin, let me just finish my thought here on Ethereum. So volume continues to pour in and support the price. I don't know if that's a function of this Ethereum 2.0 testnet that's supposed to be going live at the end of the month, or if it's talk about futures products, or more along the lines of people are getting into altcoins by buying Ethereum, although that was much more of a 2018 story than I think it is presently. I think that there's a lot of bets on Ethereum getting their shit together and actually giving a product that the community can rally behind. And that may be what we're seeing in the overall price action. So that's kind of, so where did I leave off here? Do we want to talk specific levels? Yeah, I mean, 61.8, we came into that level, and that's where you're seeing the traffic. You've got overbought conditions in RSI. You've got MACD not really giving us nice signals here on the daily. So I think things need to cool off, whether that's a couple more days or a week's worth of sideways to nothing action, or kind of distribution or accumulation, depending if we're going to move higher. We could see that happen. But, if you take some fibs and take a look at where this thing could pull back on a higher time frame, if we get nice signals, which I mean, I don't even think entertaining that makes any sense at this point. 38.2 is down to 215. I mean, if you want to really test the waters here, that 23.6 level is sitting at 240. I guess we could potentially pull back to that just from this shorter time frame fib range that I drew on the 4 hour. Let me just get rid of this on the daily. Oop, no, on the hourly, so that this doesn't look like crap. So the 4 hour, you can see just from the last time we rallied, that 240 level is Mountain Man at 61.8. I think that that's generally where we're going to see things probably coalesce. I mean, you could see potentially down to 230, but we have to wait for this breakdown to happen. And right now it's not showing up on the daily. It's not showing up on the 4 hour. So any pullbacks, I think, will be limited and not as severe. And I say that now, and I'll probably get that wrong, but moving averages are finally starting to cross over on the hourly. So if we can see these things come across the time frames, fine. But as of now, I like seeing pullbacks kind of back into 38.2 and then ultimately, down around that 240 level. So I took a couple trades over the last couple of weeks, a couple of days that failed. My most recent, most successful trade was, lo and behold, the most obvious with MACD confirmation and market structure that came in here, target at 38.2. I've been messing around with numbers, right? I'm not putting in my orders exactly at where those fib levels correspond to, mainly because I think other traders pay attention to them and they front run them. So my orders are going to be scattered around somewhere in that area. Funny enough, I had a position that I took at the beginning of the morning today that I went short from like 269 or 270-ish, and I had a stop at 278 and 1 cent, and the market rallied to 278 on the dot and missed my stop by a penny. So I'm currently short from that 270 range, and I'm looking for the market to dip. I'm not sure if that's going to come into the close today, but we've been quite nicely supported through this trading session, and you can see these kind of the volatility come into the market, and that's usually a sign that things need to cool off. So that's what I'm looking at. So it doesn't seem like Jamie's popping back in here. You need a link here. So that's the Ethereum situation. Bitcoin, it's interesting. I was talking to a couple buddies that I trade with, and they brought up this paper that came out back in, I don't know, I think it was like March of last year. It was called, let me see if I can find the link here, the stock to flow ratio. Some of you might be familiar with that paper that was published on Medium. And I mean, it was fascinating, right? So basically this guy took a bunch of correlations with silver, gold, and a bunch of variables that he determined if Bitcoin can get to the halvening, that it should be worth about 55,000 US dollars. And I've got the paper right here. I would check this thing out. This is pretty cool. Oh, is this thing? There we go. Okay, so this is by Plan B, March 22nd, 2019. This guy talks about how he calculates all these things, and he plots this on a graph. I didn't really read it as closely as I should have to be discussing it, but nonetheless, the takeaway here is he thinks that after May 2020, Bitcoin's going to be trading around 55,000 bucks. I mean, at the time when I saw this, I was like, okay, cool study. Let's see what happens. Probably brushed it aside. At this point, it's interesting just to keep in the back of your mind. I wouldn't be running out and buying Bitcoin at this point just because of this, this study and the articles that this guy wrote. But, taking a look at Bitcoin chart itself, it looks interesting just from the daily perspective. This thing really did turn the corner and got bought up. I mean, this really didn't end up going down to the lows like everybody thought it was going back to, sub 3,000 or whatever it was that all those famous guys on YouTube and Twitter always like mentioning their indicator showing them that Bitcoin's going to 1,500 to 2,000. And of course, Tom Lee, same idea with him. He actually blocked me on Twitter for calling him out on something. I forget what it was at this point, but he got pretty pissed off at me and obviously blocked me from my comment. So I don't really see what he's saying anymore, but I imagine that he's uber bullish at this point. Just applying fib extensions to this market, going from our lows at 3,100 to our highs at, call it 14,000 from June. This projects us into that $17,000 area, which is pretty interesting area to be looking at just from this higher time frame. You know, the absolute highs rather that Bitcoin had back in 2017. I would imagine that that's going to correspond quite nicely to a fib range as well. There you go. So it's just beyond. So let me drag this back up here. There you go. So just beyond 78.6. 17,000, retest these highs, and then maybe we undergo another accumulation distribution event that we're kind of seeing now. We're trapped right around that 38.2 of the extension. So this is kind of your make it or break it moment for Bitcoin, in my opinion, as this thing cools off and catches its breath, so to speak, going forward into the weekend. Potentially, we could see things blow up even more. But again, I think we need to take a break and reassess and see what the market's doing here. But as far as, you know, I'm concerned and the way that I'm trading, you do have this kind of potential divergence rolling into the market. Things are overbought. But, you know, the signal just isn't coming in for a massive short, right? Each daily candle is still making higher highs. So we still have the makings of a bull market on Bitcoin. So I'm not going to be touching that position anytime soon. I did take profits on Litecoin yesterday. Last night seems like last week, but I basically bought this thing December 30th at like 41.77, I think was the price, and doubled up last night. I ended up taking half my position off the table. So now I've got a free position. I think I sold it at like 80, whatever the double was, 83.56, I think is what it worked out to, or 55. And so I'm off. I've got that free position working on Litecoin. I could see this thing coming back down, but you know, it's interesting. These markets just have a head of steam behind them. This chart looks just like Bitcoin as well. You know, did I sell too early? I don't, you know, I had to take something off the table. I took my Litecoin position off. I still have most of my Ethereum long position. I didn't sell any of that just yet, just because I'm more of a long-term believer in that market. And I think that pullbacks in Litecoin may offer a better buying opportunity. But so far, these markets are coupled together. So we'll have to see if that changes, because otherwise there won't be any pullbacks coming in here. I also am long EOS. You know, it's interesting, actually, before I go into EOS, if you look at the Ethereum Bitcoin chart, I mean, this thing looks bullish as all hell, especially if you put this thing in the weekly chart. This thing has made W's all over. Nice little double bottom here, actually wide double bottom. This thing looks like it's just getting started. In fact, came really close down to the lows. This was like a great buy here. You got kind of two opportunities in September and again in, I guess, the beginning of January. So this thing will continue to move higher into, I mean, if you're long Bitcoin or if you're long Ethereum in terms of Bitcoin, I mean, this could be like a pretty awesome position, probably close to a 5-bagger would be my guess here, if this fib retracement will cooperate. I mean, look at this crazy wick up here. But you're looking at least a double to 38.2. And if you bought it like 0.02, you're looking at a 5-bagger up to 78.6, which is kind of where you'd be looking, or at least I'd be looking to sell off the rest of my position into this range trade here on the weekly. So that's that. EOS, I mean, we're just seeing lots and lots of bottoms across the space. This is on Binance, maybe. And this is also the BTC EOS chart. This is also putting in W's. There's just W's all around like that. The total market cap of crypto. Nice W's coming in across the board. So we may actually get ourselves a semi-decent altcoin rally and altcoin season for the first time in a few years. So I hope people got the chance to accumulate down around the lows. This Tezos seems to be very popular in the community. I really wanted to get in on this, and I was hoping we'd get more of a pullback than what we saw, and we didn't. We got this like blow off here February 3rd, which was a fib extension level, and we came back down to kind of reject that level, and then over the next couple of days things just moved higher. And at this point, sky's the limit for this thing. I don't really know the fundamentals of this, but a lot of people like it and support it, but we need to cool off a little bit. Things are getting overbought, and again, the whole market just looks like it needs to pause just for a day or two and catch its breath. So what else am I long? Actually, I don't know if I talked about this last time, this algo. Why isn't this showing up? I've got it on here. Here it is. Oh, it's ALG. It's weird. Okay, this is something else that I was interested in. This has nice breakout, nice double bottom. Looks like some nice levels to work with to the upside. 61.8's at 58 cents. I bought this thing a couple days ago. I think I'm in it at like 28 to 36 cents is my average. So probably somewhere around that 34 to 38 or 36 cent mark. And 58 cents to, realistically, I'd be looking to get a double. So I think that would probably be closer to the 72 cent mark, which is really pretty high up here. This one seems like it's more of a risky play just because fundamentally speaking, there's a bunch of coins that are being staked. And, oh shit, I need to add Jamie. Jamie's like sitting in here, hey man, let me in. I can't talk. Sorry, bud. You are now added to the stream. Can you hear me?
Hello? Hello? Someone let me into the stairs.
Oh, my bad. So I've been blabbing away about these altcoins. I don't know how long you were sitting there for.
I've been here for about 12 minutes.
Oh, I'm sorry.
No worries. I've been listening away happily.
I hope you got a chance to catch up on your whiskey drinking.
No, I've finished my whiskey drinking. I'm going on a whiskey tour tomorrow. The other half's taking me on, so I'm going to calm myself down today.
Oh, is that like a Valentine's Day thing?
It is. I'm going to cook some nice Greek food.
Ooh.
For the Greek. So yeah, man. But yes, alts, much moon, hodl. It's the standard procedure. But yeah, it's been a really, really nice rally. It'll be great if this continues. Some extra profits would always be nice.
Yeah, for sure. I was just talking about this algo, and I think the fundamentals of this are kind of fucked because there's a bunch of tokens that are locked up until like March 1st, and then everyone gets access to sell their shit. And that's generally not a good sign for these things. So I think this one has...
It's like the equivalent when people when they can sell their IPO like 6 months down the line.
Yeah, exactly. So I think this will get dumped on the market. So I think I'm going to have to start thinking about unwinding this position over the next week or so, just because of that driver there. Just glancing over our schedule here to see if there was anything. Oh, that's right. This is freaking wild. So Coinbase, of all the exchanges I never would have thought to launch a margin trading account, Coinbase launches a 3x leverage trading for retail investors. But you can't short. You can go long 3x up to $10,000 borrowed. So, you can take your $3,333 and leverage that up to $10,000, and that's the effective margin leverage the effective leverage you're given here to trade on Coinbase. But God forbid you want to hedge your account. Fuck you. You can only go long 3x long. It's like, what? I mean,
you're just going to have to long Doge as a hedge.
Yeah. Well, Coinbase has been doing a good job of adding different coins to their exchange to allow U.S. investors to trade.
Right. It's basically they're just getting too greedy. They're just going to have to basically employ about 1 million bailiffs because they're going to be taking money off people left, right, and center.
Oh, it's if Coinbase was publicly traded, they'd probably be right up there with the MAGA stocks.
Yeah.
I mean, do their fees just on the spot exchange are kind of high, and
they are.
It's annoying, but
I don't use Coinbase. They had a brief period when you could do GBP transactions, but in the end, I just sacked it off. To be honest, I didn't really like it too much, so I don't use Coinbase personally. So
Good for you. I mean, luckily, I'm one of the states that I can use this in.
right.
Wait,
What other
individual.
choices do you have though?
Oh, wait, I'm just kidding. Only 23 states are available. I'm not one of them.
Oh, okay.
Ah. Oh, well. What was your question? Sorry.
What other exchanges can you use in the US? What do people usually use to do like fiat to BTC transactions anyway?
You can use Kraken. You can use. I guess you're not a Bittrex. That one sucks. Yeah, Circle and
Bittrex?
Poloniex. Yeah, Bittrex is open to U.S.
No.
customers. Coinbase, Kraken. I
You got
use.
plenty to choose from.
Yeah, Kraken's. I'm really warming up to it. Oh, that's the other thing. Did you see what happened on BitMEX yesterday or this morning?
No. What's happened?
Let me show you what happened on BitMEX. So, flash crash on BitMEX. Oh, this is on my Twitter. Hang on a sec. Where's this freaking thing? So, Arthur Hayes got the better of everybody again, and we had a flash crash not only in Bitcoin, but also on Ripple. Oh, no, sorry. This is only on Ripple, right? Ripple went down to 15 cents in a flash crash, and this guy was tweeting out his entire account got liquidated, and some other people were tweeting out that they were not liquidated. So some shenanigans happening there. I mean, how crazy is that? Like, if you had bids sitting around 15 cents, you already at a double. This thing just...
Man, I just hate using BitMEX is the worst. People who use BitMEX, I think you're just crazy to be honest, because I mean it's not even a fair market. Like things like that can happen on a daily basis. It's insane.
It is, but that's kind of... and it's funny because didn't Arthur Hayes come out and shit all over Ripple like a day or two ago? He called it... Here it is. So 18 hours ago, he said, cripple the shorts. Pro tip, the buy and sell buttons are both equally profitable regardless of whether or not you are trading a turd. All right, so let's actually... like,
he literally doesn't give a shit anymore, does he?
All right, so that was 18 hours ago. Let's see XRP US. Why the fuck am I not? Oh, I see why. XRP USD on Bittrex. Or not Bittrex, BitMEX. Here we go. So this is probably the perpetual swap. Here we go on the daily. So 18 hours ago, I'm just curious. Yeah, so this happened 1, 2, 3, 4, 5, 7 hours ago at 9 a.m. Eastern time. And 11 hours prior to that, Arthur Hayes is shitting all over Ripple. Is that a coincidence? Like, that's really, really shady, isn't it? Right? He tweets out, he goes, cripple the shorts. And then, boom. I mean, I don't know if he crippled the shorts. If anything, he probably rewarded them. But, wow, if you ended up shorting that market, I think that was a 1-minute candle anyway. But this is why people get so upset trading BitMEX, because their stops aren't respected. And it's really hard to trade. And this is another reason why I like Kraken is I'll put my stop in there. And if the market skips ahead, you get that kind of cascading order flow coming into the market, and say my stop's like 278 and a penny, and the market rallies from 278 up to 279, and my order gets entered in, and I'm just sitting there at 278 and a penny, but the market's already trading at 279. My stop would not be honored on BitMEX. It would not be honored on OK Exchange. However, with Kraken, it'll actually liquidate my position right away if that happens, which kind of sucks because
cool.
There's some slippage, right? I get liquidated at 279, but at least I wouldn't still be holding that position. Say, for instance, I'm sleeping and this fucking thing keeps rallying to 300, then not only am I still in the position, but most likely I'm margin called and I've lost the entire position. So that's...
You've been woken up.
Well, that's the hardest thing about...
Hello, this is your margin call speaking.
Dude, when I used to trade OKX, man, I couldn't fucking sleep. I had alarms set. My phone was buzzing. My computer would wake me up. It was a nightmare just to keep, manage the positions, because the stops never worked properly. You had to use an API and like a third-party program that you could either script yourself and hope that that was working, or the API didn't disconnect. It was the worst. And now it's just like the best. It's so great. I slept like a baby all last night. I had both my stop loss set and my profit taking objective, and it actually worked. And I got my profit off the table. And if that was OKX, I couldn't have a stop set at the same time that I had my profit taking objective set. So it's kind of, I've missed the 20x leverage, but that's really the only thing I miss is the degenerate gambling that I used to do with the 20x leverage. But I got really good at it. So that's kind of the story. I mean, here we are again, way over our time limit, an hour and 30 minutes, and I've blabbed enough. What do you have to contribute, my friend?
I think I have absolutely nothing to contribute, especially not into to crypto. Nothing. I think you've said it good enough. Hodl. That's all I've got to say. Other than that, I suppose we'll catch you on the next podcast. But I mean, we're improving. I think it was 1 hour 40 last time, was it? 1 hour 30. That's 10 minutes improvement.
Yeah,
we're getting there.
We're getting there. Maybe,
but we're getting there.
We could edit. We could not do a live stream and just edit the video and make it much more.
What, and give ourselves more work? Please.
Oh, good. You're right. Fuck that. There's no way either of us are doing that.
We can't even be bothered to write a disclaimer. Never mind do that.
Yeah, this is purely for entertainment purposes, and I think it's purely for just you and my entertainment.
Yeah, exactly. It's a good catch up for us. It's a good excuse for us both to catch up.
Yeah, and we need to do a stream where I'm drinking at the same time.
We do need to sort one out. That means what? So if I'm awake at midnight, what time is it for you?
That's 7 p.m. Eastern. So that's almost.
Is that a good time to drink?
It would be, but it's like prime dinner time.
Well, in that case, make sure you get a good, I don't know, whatever you want to eat, a nice steak in front of you, just as we're about to top it off, and then I'll chat away while you mention your steak, and then we'll both get a little bit gone.
Yeah, we can talk, cattle futures and all that, and hogs, which, by the way, China is slaughtering the shit out of. Those prices are going crazy.
Pork prices, oof, come through the roof.
Do you eat much pork?
No, I'm a steak man. If I'm honest, I like a good ribeye.
Ooh,
I'll have a steak and fish.
That sounds good. Yeah, I'm more of a steak person myself, but I don't eat it that often. I know people that only eat red meat. That carnivore diet.
I got a mate who's a carnivore. Completely. Yeah. Breakfast, ribeye steak with a little bit of butter. Lunch, ribeye steak with a little bit of butter.
That just blows my mind. Like, I don't know how those people don't have coronary artery disease.
Yeah, well, he actually had a check not long ago, and it was the best bloods he's ever received. His best results. So, say what you want for now. He's been doing it for I think about 2 years now. So.
I have a friend like that too, who did it, and like he said, all his digestive problems went away, and his cholesterol levels are better than they've ever been. There's like a Joe Rogan podcast that talks about it. I think I watched
Joe Rogan did it for the whole of Joe Rogan did it for the whole of January, didn't he? I mean, he was saying he feels amazing.
That's crazy, right? It almost makes you want to do it. But
yeah, I know, right?
What a pain in the ass it is to eat that 3 times. You'll hate steak. Like, I don't know how you want to eat that ever again after you've eaten it for a month straight.
Yeah, my mate's other half goes crazy because the house just stinks of steak 24/7.
Oh yeah. How do you
imagine?
I really like making my steaks in a cast iron and like searing the shit out of it on both sides.
Oh, really? Nice. I do the same, yeah. And then have it like rare to blue in the middle.
Yes.
Just pure blood, but burnt on both sides.
Do you not even put yours in the oven?
No, I don't put it in the oven. I literally just
You just sear it and
one
eat
minute
it.
on one side, sear it, yeah, and then just eat it. Yeah, it's the best way because you get the best of both worlds.
So you like it cold in the middle.
Yeah, it doesn't bother me because it's nice and warm on the outside and nice and juicy. Oof,
You know that they have I think they call it here in the U.S. Pittsburgh style, where you like burn the shit out of the outside with peppercorn crusting, and then it's cooked for like less than a minute, and it's blue in the middle.
That's my kind of steak.
Yeah, so if you ever come to the U.S., you got to order your steak Pittsburgh style.
Pittsburgh style. Notice.
No, not tits, like, not boobs, but pit, like your armpit.
Oh, apologies. Pittsburgh style.
All right, I think on that note, we should probably wrap it up.
Super.
All right, that was fun. I think let's end the live stream. It was fun, everyone. I hope you enjoyed. We've got 10 whole fans listening to us. Thanks for sticking it out. I hope you enjoyed. We'll keep doing this once a week. Probably look for us next. Actually, I'm going to be in LA next week. Maybe we won't do it next week. I don't know. We'll figure something out.
In a couple of weeks, more than likely.
Yeah, maybe we'll skip next week, or we could do it on the weekend. Whatever, we'll figure it out. But anyway, thanks for listening. I'm the Bear, and I'm Jamie King. I think you need like what's your Twitter? It's like Jamie King FA.
It's five Kings FA.
Can we just call you the fifth king?
The fifth king. I'm actually I'm technically the fourth king, so maybe I should be known as the fourth king.
So why is that your Twitter name?
Five Kings, because Five Kings is the family quantity, but I'm the fourth king in the family.
I've never heard that. Where does that come from?
What do you mean?
Like, why are you five kings?
Well, my family's five of us, and my surname's King, so the five kings.
But maybe
I'm not the fifth king.
I'm like, how do you have five kings in the family? I thought you could only have one king at any given time. Got like a royalty structure in your family.
This is a royalty podcast coming to you live from Buckingham Palace.
Wait, so we're calling you the fourth king?
I suppose so. I can be Macro Man.
Macro Man. Whatever you want, buddy. You take the sign off. All yours.
I'm just Jamie. Jamie. Oh, I'm gone.
All right, everyone. It's been fun. We'll talk to you next time. Bye.
Take care, guys.